Yo, what's up, everyone? It's your boy Looney back with another market breakdown. And this one is from a comment I got asking, how do you actually choose your stocks? Because listen, it's not just about the strategy. Yes, selling puts, covered calls, leap options, all that only work if you're picking quality names with strong fundamentals and solid price action. So today I'm going to break down why I'm bullish on SoFi and also how I use Mara and Riot to stay exposed to crypto with some control. Quick shout out to the Discord community. It is free to join, and then premium gets you access to my real-time trades, weekly calls, coaching, and full course access. All links are in the description. You can check it out there. Let's start with SoFi. Actually, before we start, my count is at 35K. On the day, I'm up $300, so about even. I'm up about 1%. So let's look at SoFi. Let's pull that one up. I have 400 shares. I own them at $11.29, so pretty good average cost. I have one leap call, $10 buy call going on, and it's currently trading at $11.30 or 33 cents as of April 20th. And it's a fintech disruptor. It offers student loans, personal banking, investing, all in one platform. It's a one-stop shop for financial services. I know some people use it to actually hold some of their portfolios on, and it's great. I know the CEO, Anthony Noto, is very reputable. He's very good CEO, and he's strong with the companies he is able to manage. So I'm not only investing in the company, I'm also investing into the people. I feel Noto is a very strong candidate to bring a company to where it really needs to be. On the other hand, SoFi is up 35% for revenue year over year. It's had 3 straight quarters of positive EBITDA, and it's actively cutting costs and improving margins. And that's what maturity looks like in a growth stock. Like I said, the CEO is very visible. He's active on social, and he's leading like a real operator. Even had, I believe he was CEO for other companies. I'm not sure which ones. I know he puts it in his bio, but I don't want to say something that's wrong. So I'm not really chasing here. I'm managing my cost basis with cash secured puts. All my shares that I own for the 400 have been cash secured puts. So not only am I up on just holding the shares, but I got paid to own these shares. And that's how I was getting it for cheap. And I'm using those shares to sell covered calls. So I'm running covered calls against my shares for some kind of hedge or just collecting income. And I also, like I showed before, have a long-term buy call option that is not really doing so well, if I'm being honest. It's down 41%, but I'm just going to hold it. It's very long-term. And I'm actually using it as a poor man's covered call because it is so long expiration out. It acts as if I own the shares, and I'm able to run covered calls on that option. So I'm able to run 5 contracts. So it's basically like I'm owning 500 shares, which is very cool to see. It's unfortunate that the long-term call is in the red, but I'm make sure to look in that one very closely to figure out what I want to do with it. I might just hold it for now. And SoFi really is just at its middle price action. It is on the higher end, but I'm not really in a rush to get in, to get out. I think this is a very safe stock no matter what price you get into. Obviously, if it's at $100 tomorrow, it might not be the best time to buy, but I think it is just an overall safe position to put a little bit of your portfolio into it. So I'm not putting all of it into it at once or just in general all of it. It only takes up 14%. And this isn't financial advice, so obviously do your own research, but some kind of dollar cost average with cash secured puts is a very safe strategy, especially on a stock like SoFi, which we could see it go to $20. A lot of rumors are heading that way. On Robinhood, it has listed at $14. So just overall, it is undervalued. And there's just some good news with the loans recently. And tariffs don't really affect this company. That's big talk right now going on with the rest of the market. It does affect it a little bit because if the S&P is down, this stock also just follows that. It's not a full protection against it. But overall, it is a very strong company. And that's why I'm holding it long term. I'm looking to stay invested into this company. Next one we're going to look at is Mara and Riot. These are my crypto hedges or just overall control. I'm going to group them together because they're both crypto mining companies. Mara holds more Bitcoin, but they both are mining companies. Bitcoin, it is at 87K right now. Yeah, 87K. So it's trending upwards. And while I'm a little cautious on the altcoin scene, I own Dogecoin with a bunch of others. And I just want more control of these because these are very volatile. And that's why I'm invested into the crypto mining. So before we get into it, I do want to say that I got a little too excited. I started buying it at prices I probably shouldn't have with Riot and Mara. And that's one of my biggest mistakes. But I slowed down with both these stocks because I didn't want to get carried away with things and just overall overexpose. And I'm going to do more cash secured puts on it. But I want to just get that clear because I probably should have waited till there was better price entry. My average cost isn't terrible. It's at $9, but I probably could have done a lot better with my entries. And why I hold Riot, it is something that follows crypto's trend, but it lets me keep it in control. So if I know that crypto is going down, but Riot hasn't really moved, it's probably a good time to sell a covered call because most likely the stock will follow. So it's not one-to-one. This stock takes up around 17% of my portfolio. I'm down on that 28% like you saw. But that really just means better entries. Like I said, I'm going to sell cash secured puts at lower strikes, probably at that $5, $5.50. And then the covered calls are to collect premium and for income and just hedging. Mara, very similar situation. I own 200 shares and it takes up about 8%. Same thing, doing cash secured puts and covered calls on it. This one takes up less, so I'm going to do one on this tomorrow. And I also want to mention, I have seen interviews with the Riot CEO. He talked with two other members that go over the crypto mining companies. They go over CleanSpark, Iris, I believe, is another one, Mara, and they're very involved. They look at Bit Digital. Riot was trying to acquire, I think, Bit Digital at one point, and they just talk with the CEO, what he's doing, how he's planning. I believe one of their compounds is in Texas, so pretty good for the season because I believe it gets tougher during the colder months with the machines that they use. But I do get to collect premium during downturns, not perfect hedges, but they give me exposure with strategy, not hope. Just to wrap things up, I am stacking SoFi for long-term growth and that steady premium. I'm using Riot and Mara to stay in crypto while still running puts and calls for that consistent income. And I'm not just going in blindly. I'm managing my deltas. I'm tracking some support zones and paying attention to risk exposure. If you want to see my real-time plays, chat with the community, or access the full options course, hit the Discord link below or the premium link below and drop a comment. What are you adding right now? Don't forget to like, subscribe, and I'll see you in the next one. Peace.